Right, so let's talk stocks versus options. Why would we choose to trade options over stocks? So there's a few reasons. One, stocks. They're going to go either up or down. And so typically we buy a stock and we hope that it's going to go up. If it goes up, we make money. If it goes sideways, we don't. If it goes down, we lose money. With options, we have an additional strategic advantage. Well, in fact, we have a strategic advantage. We don't really even have one with stocks. With options, we can choose our time. We can choose that the contract expires, so we have a date range that we can work with. We can also choose a price, so we can lock in a price or sell at a certain price. We know what we are happy to sell at. We also can look at the probability in which we're going to be profitable, which is amazing. We're going to go in to this trade knowing our statistical probability of success. Also, we can profit from any direction with options. So we can profit if the market's going up, down, or sideways. In return with stocks, we can only profit if it's going in the right direction. Also, we can use math with options to dictate exactly what our chances are, as we spoke about before, but this math is going to be able to guide our trades. So we have an advantage in knowing what to do, and we can actually action things. We can manage our positions and helping us to become successful. Whereas with stocks, we're just hoping and praying that it goes in the right direction. Options can also be used as insurance. So with the stock, if the stock went down, well, our money is going to be going down with it. With options, we can actually buy an option that's going to protect our money. So even if the stock was to plummet, not only is our money safe, but we can even profit from that scenario. So a huge difference there. Now, what's the trade-off then? Why wouldn't everyone be trading options? Well, there's a few things. One, you need to understand options. You have to put some time in to learn this skill. With stocks, you can just buy it and hope that it goes in the right direction. Maybe do a little bit of research, hope that you're right. But with options, with the added flexibility comes a few added things that you need to learn. So there's a downside with options. Another downside with options is that we give away a potential upside. So what do I mean by that? With a stock, you buy a stock at say $10, theoretically that stock can go up to $100, $1,000, $1 million, and we can profit that whole way. Of course, it can also go down to nothing. However, with options, we are capping our gain. So we're going to create these contracts that say we're happy to sell our stock at $11. For that $10 stock example, we could only make to $11. We'd get that premium that we receive, and so we're happy because that's what we're collecting every month, plus that extra dollar. However, if the stock was to go up to $15, $100, $1,000, $1 million, we wouldn't get that. So that's the contra really. We are happy to take a consistent gain that we know we're going to get, and in return, we're going to limit our upside potential. That's it. So hopefully that's given you a clear little overview, the difference between stocks versus options.